Got to talk about these crazy bubbles that are going on. So a little bit market focused today, and I'm very market focused because we just did an interview with Luke Gromen, which is coming out tomorrow on Wednesday. Great interview. You're going to love that one. And also the Suzanne Trimbath interview went out live on YouTube last night, and woke up this morning and saw that it somehow got 40,000 views overnight, and it's catching on. So apparently there's something to this vibe out there right now where people are understanding, look, we have this totally fraudulent rigged market system. And so I want to talk about that rigging and that fraud here today. So let me pull up this. Where do we start with? We'll start here. So check this out. So CPI comes in for February. We get the print this morning, and it rises to 3.2%. Expectations were 3.1%. So guess what happens? Bonds start to sell off, and so do stocks. Both stocks and bonds. So interest rates are starting to rise. 2-year in particular has a spiking yield, and then, of course, that's not good for stocks. So stocks futures immediately begin to sell off. Worse, it was the core CPI was also above inflation expectations at 3.8% instead of 3.7%. So this is the 35th consecutive month with inflation above 3%, second straight increase, a Fed pivot becoming less likely, according to the Kobesi letter here, however you pronounce that. So, yeah, that's a thing. So with a Fed pivot less likely, stocks should get hit. Of course they should. But we're in this massive, massive bubble territory, and you know you're in bubbles when bad news is good news and good news is good news. If this had been less than expected, stocks would have spiked. But it was more than expected, so stock spiked because, well, let's look at this data. This is really bizarre here. You can see here, this is the market announcement. Right here, stock futures did start to spike down for about a minute, and then they reversed. And then there was some other, as people thought it through, but then out of nowhere, here comes all this mysterious buying coming from somewhere. Where is all this coming from? Well, that's, as you know, I'm highly suspicious of these sorts of things because somebody in power got really scared about what was going on with stocks, and they got scared back here in October, at the end of October in 2023. So from November onward, this ruler straight advance right here looks a lot like this ruler straight advance down here, which is what happens when you have easing financial conditions. And so Luke Gromen is going to take us all the way through all of that tomorrow. But listen, if you know that the Fed and the U.S. Treasury is a combined cabal, they're going to protect the bond market at any cost. That means they're going to torch all things dollar related. They're going to print and print and print and print. And so if you're expecting printing, this is a rational sort of a response. But you know what's not rational is looking at something like this, where NVIDIA, again, is up 5.5% today. It's got a price earnings ratio of 76, meaning people are willing to wait until the year 2100 to get a single dollar invested with this brilliant company back. Now, the only other way you can make sense of this is to say, well, we're expecting the earnings of this company to double. So if it doubles over the next year, it'll bring the PE back to half of that, which would be 32 and a half or something. 37. That's still kind of high. And if they double earnings again from there, well, now we're getting down to maybe 18 or 19 as a PE ratio. You can begin to make adjustments for that. But this is obviously insane. And wait, let's look at this on a max scale. That, my friends, right there, that is purely right there. That is a classic bubble chart. That's one for the ages right there. Looks just like a tulip chart, of course. So what's weird about all of this then is if we look at this heat map, we can clearly see that when they want to jam the markets up, they are doing it with just a handful of companies, NVIDIA being one. Apple's going nowhere right now. Google is going nowhere right now, but Meta, Amazon, Microsoft, NVIDIA, they're just cramming everything into these 4 stocks. And of course, if I was scared about letting markets go backwards at all, that's what I would do too, I guess. And why are they so scared about markets going down even for a minute this morning before they had to step in with their PPT? That's why I get nervous. The more urgent they become about just cramming everything higher, regardless of whatever other conditions may be afoot, that makes me know that they know something I don't know, right? And that's as good as I can get on this out here on the cheap seats. But they are clearly scared of something, and they are jamming these markets like crazy. Now, I think that we're getting closer and closer to a lights out event on all of this stuff, and then they're going to absolutely pull the covers, and that's where the great taking comes into play. They've done everything they can. Luke's main hypothesis is that once oil gets over 90, the bond market really, really gets into very steep disarray. We saw spiking yields back here. The 10-year went over 5%, and they freaked out, and they started doing whatever they had to do to jam the price of oil lower, releasing from the SPR. I think they were also playing with the futures markets and paper games. So paper oil, like paper gold, paper silver, they're doing their paper games. And the story here is that these interventions are getting larger and more frequent. So the amplitude and frequency, are respectively getting larger and closer. And so that tells us that we're closer to the end of the game than the beginning. And I think we all have to begin to prepare accordingly with that. So that's kind of an interesting thing there, seeing what's going on in the oil market. Again, it's going nowhere. It's just, given everything that's going on in the world, look, it's gone nowhere. It's just like basically stuck somewhere between 75 and 80, and it's been there for months or a year, we could even say, with, mostly just hemmed between these two numbers right here, right? 70 and 80. With one brief excursion back here that got slammed hard. So at any rate, why are they so scared of all this? And by the way, this is when the whole Middle East is blowing up and the Red Sea is shut down and all kinds of crazy stuff is happening. Oil is worth somewhere between 70 and 80. That is the price in Luke's Groman's perspective. That's the ceiling. The bond market can't withstand more than $80 oil right now. The problem is that oil supply isn't interested in producing a whole lot more less than 80. Probably isn't producing a whole lot more less than 100, be my best guess right now. At any rate, let's carry on with this. So let's look at inflation really quickly. Over the past 3 years, Charlie Bilello says here, well, U.S. wages have increased on average 15% over the past 3 years. So that means that on a relative basis, if you're buying clothes or medical care, you've done relatively well, although medical care is a statistical fiction. He's pulling this from the CPI report. The CPI report says medical care has gone up 5.8% over the past 3 years. Bullshit. My insurance for healthcare goes up by double digits every one of those years. So that's just, these are CPI numbers, right? So that's BS. But you've lost, according to a CPI basis, if you had 15% wage increase over the past 3 years, you've lost against every other one of these categories. Food away from home, food at home, shelter, rent, cars, new cars, used cars, electricity, gas, utilities, gasoline, actual home prices, transportation, you name it. So that's the actual status of, this is why Biden is polling so badly. People do not like this. This is not good. We hate getting poorer and immiserated on a year-over-year basis. And for the Federal Reserve to basically hint and wink that, oh, you know what? Oh, we're so sorry, you poor stock market. We'll bail you out no matter what, so that we get these crazy behaviors here, is really just the Federal Reserve saying, screw you, common folk. We're going to bail out the asset holders one more time. And the asset holders are the people we love the most in this story. And we're going to ignore Plutarch's warning that, gap between the rich and the poor is the oldest and most fatal ailment of all republics, all of that. So at any rate, that is where we are on that part of the story. Now, what's fascinating is that the semiconductors, remember we saw those here on this heat map? Here. These are all the semis in here, NVIDIA and AMD, and I talked about, if we pulled up these individual charts, most of these are just like serious bubbles. But don't worry, because this time is different, right? That's the story we have to believe in. This time is different. Semis relative to the S&P 500 just exceeded the March 2000 high. Here we are again. Welcome to the bubble, everyone. It's crazy. In retrospect, everybody will have seen this coming. In prospective terms, it's lonely territory. Very few people see these things coming on the way in. It's just how the world works. But this is very clearly super bubble territory. And so what do you need for a bubble? You need a good story and you need a lot of credit. So the Fed has engineered massive easing of financial conditions, but this time they did it really surreptitiously. They didn't do QE and announce